Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. Thanks for listening to the show each and every week. We're usually airing on the weekends while you're driving around trying to do something. And I know how difficult it is right now getting around to do anything, whether it's hardware business, whether you want to buy some furniture, whether you just want to go out and do some shopping. Not easy to get around in many of the major markets in the United States because of COVID. We will get through most of this, but not soon, probably 3-4 months. Don't you think, Daryl? About 3-4 months?
Probably at the outside, yeah. It depends. We've got a couple of things we haven't seen the results of yet, and that's New Year's Eve and Christmas.
Right. And, we're broadcasting this from Southern California. We record in Southern California, so we're a bit overcome. But for those areas of the country, we're in 5 stations in 3 different states from Albuquerque. And by the way, I love Albuquerque, trying to get with the Association of Realtors down there to provide me with some local realtors to talk about the market, what's happening there, where prices are going. We've seen prices really escalate all during 2020. We don't see that receding anytime soon. Some markets more than others, but all markets need more inventory. We want to talk about that coming up in the show. We're also up in the Las Vegas, Nevada real estate market at 1400 there. We air that show on the weekends as well. And what we like to do is to bring in local people from the different areas where the station is, whether it's up in Tahoe, where Gay Tahoe is, or in the Inland Empire, where one of today's guests on the show, Gary Herrera, is going to talk about some of the obstacles towards getting a loan or getting someone into a house if they want to purchase a loan. All these are very important to somebody who's either a first-time home buyer or somebody that's just been looking around for a home for a year and is competing with 10, 15, 20 buyers per home. How do we get into that? What can we do on the lender side in order to help them do that? Anyway, Gary from the IE, the Inland Empire in Southern California, will help us do that. We are also on podcasts, the Big 8, they call them. I think, Daryl, you got a list of those, were they?
I sure do. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Excellent. YouTube. Let's go to YouTube. Jeff Barton, The Mortgage Voice. That's my channel. You will see this show as well as hundreds of other shows that we've done over the years. And there is a different show that we do on a weekly basis, probably 2 or 3 times a week. We're on LinkedIn and Facebook. We try to get to Twitter and Instagram at least once a week for this show. It's the Mortgage Minute. How clever of me, right? The Mortgage Minute from the Mortgage Voice. Anyway, we talk about similar things, but in a shorter, more timely fashion, meaning if it's happening that day, it'll probably be on that particular show on LinkedIn or Facebook. We can be reached. If you go to now Malibu Funding is the company that sponsors the show. And they are a loan company, and they're in 13 states. And we're happy that they sponsor the show. I happen to work for them. This is my kind of my moonlighting job that I do for them. But anyway, if you go to their website, malibufunding.net, you can look and see what they do in all these different areas. They have 40, 50 loan officers on their website that you can look at. And certainly the different programs that are offered now that will be offered this year in 2021, and what we could look forward to in regards to either the rates or the programs or the availability of funds. We don't see any interruption in availability of funds. Matter of fact, there's so much money out there that it's almost difficult to see rates rising much more than a half point to 3/4 of a point throughout the year. And there's a couple of different ways you can look at this. The treasuries and mortgage-backed securities being purchased by the Fed is the way I think you should look at it, meaning that that's what's ultimately keeping rates low. The Fed decided early on that they needed an intervention when COVID happened. We had seen I guess, a year ago right now, rates inching up, and we were looking probably at 4.5% by the end of the year if that trend continued. COVID hit March 15th. Fed stepped in and said, you know what, we're going to keep short-term borrowing at near zero interest rates, and that's for the member banks, and then they turn around and lend that money out to a lot of us. And then in turn, we're going to buy $40 billion a month of mortgage-backed securities and $80 billion a month of U.S. Treasuries. Now, the 10-year note is what keeps rates wherever they are. We'll talk about rates too, where they are today. But given that, that's why I say we're looking at long-term rates probably staying pretty close to these record lows that we have now. There is some interplay in that. There is reason to suspect that the disaster or politics or any number of international, whether it's the Brexit deal actually happened, so that's a good thing. But there could be, China problems. There could be Iranian problems. There, a lot of these three major things are what disrupts markets, and disruption in markets is never a good thing for mortgage rates. Usually what happens is that the lenders get spooked and they raise rates because they want protection, and the protection is in terms of additional dollars if in fact the mortgage market tanks. It has tanked several times during the last 25, 30 years, but for the most part, since 2008, it's been pretty steady decline in interest rates. We've seen some ups and downs, but pretty steady from where they were in 2009 and 10 to where they are today in 2021, 11 years, pretty solid record of lower and lower and lower rates, which has always meant high demand for loans and for houses. So let's get into rates currently and talk some more about that. The 30-year fixed rate is at 2.78. The 15 is at 2.32. The FHA is at 2.25. Jumbo is at 3.12, and the 5/1 ARM is at 2.34. Now, all of these rates are really up. Now, when we look at rates on a daily basis, red means up, green means down. And when we see red, okay, rates have gone up. But when you really look at it, it's a couple of basis points here and there. We're really flirting with the lowest rates ever still. So even though rates have gone up a little bit from where they were yesterday, we're really looking, as I said, at pretty low and continuing low rates. The 10-year is at 0.954. Now that 10-year is traditionally how we would look at where rates are going to head. So if we've got a rate, let's say where they are today, it should correspond directly to the 10-year note. Well, we know it doesn't because of the Fed purchase of Treasuries and mortgage-backed securities. Well, how does that really affect the 10-year? Well, if the 10-year goes above 1, now we said on, I think it was last week's show or during one of the weekly shows, which we do on LinkedIn and Facebook, that the 10-year last 12 months has been trading from 1.8, 1.7 to 0.32. So there's a pretty large range in the 12 months. But in the last 90 days, and let's go to the last 45 days, we've been trading between 70, 75 basis points, not basis points, but the 0.75 is the yield on the Treasury up to where it is now, which is 0.95. That is a very narrow trading range for the yield, and therefore, if we break above 1, we could see rates creep up a little bit more. And it's undetermined where that particular mark is going to hit, but where it hits is going to determine a little bit about what happens in the mortgage rates for the next week, 10 days. Housing Wire, rates will remain near record lows. That's from Housing Wire today. And I think that's true. And I've said that earlier in the show. Since 2012, the average price of a house is up 47%. That doesn't seem like a lot, but when you've got a $100,000 house in 2010, now it's worth $150,000, that's good. Most long-term wealth in the United States is through your home. So if you're looking for generational or let's say you're passing wealth from you to your children, most people are doing it through their house. 50% of the houses out there are very close to paid off. So that's a big chunk of change. We're talking 50 to 60 trillion dollars in loans in the U.S. Half of that is paid off. That's pretty good. We got a lot more to talk about. I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning in, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, listening to the show, hearing what we have to say, listening to my sometimes rants, sometimes lectures, but always my heart's in a place where I think housing is almost the most important thing in America in terms of getting people to buy into our system, to buy into conforming to what we do here economically and what we do here as a country politically. I know that this isn't a political show, but rowing in the same direction, or at least in the same ocean, is probably a good thing, and everybody wanting to get back to work. I try to bring to the show positive and generally upbeat people who believe in what we're doing and have exciting and interesting things to say, try to solve some problems. Guy with us today has been on the show several times. He's just opened a new business, Unify Home Loans, and you can go there, unifyhomeloans.com. It's Gary Herrera. And Gary, first off, thanks for coming on the show. Thanks. How are you? And Happy New Year.
Happy New Year, Jeff. Thank you for having me. And I've been great and I'm blessed.
Excellent. Thank you. All right. Two things that I told you off air. One of them is the exciting times of a new business opening and the possibilities out there. What made you decide to do it, and how you feeling about it?
What made me decide to do it, obviously, was something that struck me a few years back. Seeing you and your business, I seen the success you were having. I love the way you ran your business, your model, and the way you treated everybody. So thank you, Jeff, for all that stuff. You're very encouraging in what transpired into me opening my own business. It was more difficult than I thought at first, and then going through the whole pandemic was another kind of issue in itself. But so far, so good, and it's been great. Been great so far.
Okay, let's talk. I know opening a business is most people don't realize it, but yes, the government and the powers that be require many things, especially for people in the mortgage business. Tell people a little bit about your difficulties with that and how you overcame it.
Yes. So there's a lot of I guess you can say from the state, really, when it comes down to more than anything, the state of California, they're quite very involved and a lot of oversight in what you're trying to do. First through the DRE or the DRE, whichever, they can't make up the name who they want to be, and then going through NMLS trying to get approved. So essentially, what you're doing is you need to get your BRE, get your brokers, and that's all through the state. Then you get your NMLS, which is federally, through the federal, but at the same time, the oversight, the main bureau is the DRE again. And there they are, sticking their hands where, just making it more difficult nonetheless. But it is challenging in that aspect. There's a lot of hurdles to overcome. And then with the pandemic itself brought a lot of new things where you couldn't just go into the office, you couldn't do this, everything was by mail, and it was just really delayed. That was the other challenge in that. But once you get all set up, then you got to there's the other side, which is the entry fee side, which I think I spoke to you once about, which is, now you have the admin, the broker side, and the larger responsibility, which it was a little shocking, but I'm up for the challenge, and I see, and it gives me more of an insight and gratitude of what you do as a business owner with Malibu Funding.
Well, two things I can echo is one, yes, it's very difficult to be, in our business and have the type of oversight that we have. And two, when you have something that nobody recognizes that there's effort to it, that means you're usually doing it pretty well. So I think you'll be there, get there. Tell me how you're helping your consumers, how you're helping your customers based on this new business that you have, and what are you focusing on?
Right now, the main focus is just kind of bringing more of the customer service, more of an efficient, kind of easy approach to the process. What I noticed in the industry more from big banks is that their processes are really, really delayed. They're 45, 60-day escrows, which is crazy, you know, and it just shows that either one, they're backlogged because there's too many people trying to refinance and purchase, which is what the current market is. It's a bulk of everybody, and it's inundated. And also goes to maybe what I would like to say is more of like the knowledge. If they had the right people, they got, you know, right underwriters, the processing. So what I try to do is simplify it. Matter of fact, I got a loan that's currently opened up. It's a refi. They came to me, and they were with one of the big banks. I won't say it starts with the C, but one of the big banks. And they've been in the process of refinancing for 6 months. And I'm just blown away at that.
Yep.
And they're always saying, oh, well, you know, now some documents expired, and we need new documents, you update this. I got the file, I got submitted, and it's already approved, you know, conditional approval in 2 days. And it's just a matter of you knowing and understanding what the underwriters are looking for and setting it up for a clean file for submission where it's in and out. There's not many touches that you need to get from some of these borrowers that are out there and they're having these nightmare type of deals.
Hey, tell me what you're doing to help buyers. I know the real estate market is really tight. There's usually a lot of double or triple or quadruple offers on a particular property. What are you doing to set your borrowers or your buyers aside? You know, how are you giving them a leg up? What are you telling them to do so that they can get the house they want?
First off is just making sure they're well qualified buyer, right? And making sure that we scrub them really well, making sure that we're not just throwing fluff in an offer. Reaching out to the listing agent, you know, giving him confidence that this borrower can close, you know, and not just that he can't close, but that we can perform, and he should have our offer in the forefront, in the front as a front runner. It may not be the highest, it's not going to be the lowest, but at the same time, it's going to be the most solid offer that you're going to get. And, you know, especially with, like I said, with these kind of deals going on, you don't want to get stuck in a 60-day escrow when they want quick 21, 30 days.
Let me interrupt for a second. It was very interesting what you said about being able to reach out to the listing agent and talk to them. How do you talk to them? Is it by phone? Do you send them an email in order to tell them how, maybe like you say, how do you do it?
I just reach out to the listing agent. You know, once I get the pre-approval letter ready for the buyer, I give it to them. I talk to their agent, and I ask the agent, "Do you mind the agent's number?" Obviously, I can get it off the RPA if they send it to me. Oftentimes, they don't give it to me, and they like hearing from the loan officers, because
sure they do.
You know what you're, you know, you're the one qualifying them. It's not the realtor. Oftentimes, realtors don't trust the realtor in that sense where they like, hey, you're not the one doing the loan. Are they qualified? You know, that's the main question. Well, ask the guy who's qualifying them, which is the loan officer. And if it's a good loan officer, you can reach out and say, hey, we already got this. We're up good. He has proof of funds, and you can provide any documentation that they would like to see, that you're allowed to show them, whether it's assets,
Yep.
DU. Some will want that approval letter, and so on and so forth. Sometimes we even want somewhat of a conditional approval, which
Right. DU or something like that. Right. Hey, Gary, can you shout out your phone number for people who need a great real estate agent in Southern California? A great loan officer?
Yeah.
Great.
310.
Yep.
310-882-9329. So they can reach me there. They can text me, or they can go to unifiedhomeloans.com, and if they have a question, they can get me there. So
great.
Yeah.
Gary, thanks very much. That's great information about getting someone, contacting a real estate agent. I hadn't heard that in a while, and I really appreciate it. Thank you.
Thank you, Jeff.
Okay, and that's Gary Herrera from Unify Home Loans, unifiedhomeloans.com. Contact Gary if you need a terrific loan officer. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in and listening to the show. We're on each and every week. We're on 5 stations in 3 different states, from Albuquerque up to Las Vegas, Nevada, to Tahoe, California, and Nevada, as well as the IE in Southern California. We're looking to expand the show. So if you have some areas or comments or things you need to get to us, please do. You can also see us if you want to go to Facebook. Jeff Barton, the Mortgage Voice, is my mortgage channel there. My Facebook is the same, Malibu Funding or the Mortgage Voice. We do this 2 and 3 minute show on a daily basis on Facebook and LinkedIn. A lot of people look at that. It's about a minute and a half, 5 minute long, something like that. It's daily. It keeps the updated version of what the lengthy show is on the weekend current. So in any of these areas, if you like what you like, please click in and say so. Join what we're trying to do. It really helps us get messages to other people. It's a confusing business in terms of what we do, because it requires a lot of different disciplines to get together and really coordinate so that you can get your loan. I know that the housing market is tight, so you want to go into any loan situation with the best possible way to be able to get that home. Part of that is, of course, your credit score. What is a credit score? How does your credit score work? Is there changes in the credit criteria that you can actually have control over? All of these questions are, unknown for most people. So I brought today back with us a second time, and I really appreciate her doing that, is Lori Zook. She's a retired credit expert. She also runs a terrific Facebook page for people like me who run this particular show. And Lori, thanks very much for coming in, and thanks very much for doing the show. How are you?
I'm doing good. Thanks so much for having me. I think the show is great.
Oh, thank you very much. It's funny. We have a lot of different shows on the group, and it's hard to get to listen to all of them. But I've listened to some more than others, especially if it's close to the same business that I am. But I appreciate the forum and the ability to get together with other people doing what I'm doing. So thank you.
Oh, you're very welcome. You're very welcome.
Okay, let's talk a little bit about credit. I think being in the first part of January in 2021, understanding what credit is and how it is such a key component to getting a loan. Explain to us how credit is established for most people, and then when they get into trouble, what might be able to be done in order to help the credit score.
Okay, big question. So credit is what a lender or a bank will extend to a particular person based upon certain things. For example, what is their payment history and how long they've had credit, for example. So there's a number of factors that determine it, and then a lender will, based upon a FICO score, and let's say it's Fair Isaac and Company, which has been around for probably 40 or 50 years at this point. There are FICO scores that were developed, and in other words, in order to qualify people. based on certain criteria and an algorithm. That's the tricky part. So what most people don't know about FICO scores is they think that each credit bureau, TransUnion, Equifax, and Experian are the big three. They think that there's only one set of scores. What they don't realize is there's actually multiple sets of scores, and there are different software versions that each of the bureaus use for different things, whether it's a mortgage or for insurance or actually some job positions like classified jobs, for example. So there's a lot involved in credit. It's not just a simple black and white type thing where people think, oh, my score is this, but hey, how come this other credit bureau has a totally different score? That's where it becomes a little more complicated because a particular company that a lender that you have, for example, a credit card, it might report only to one bureau, it might report to two, or it might report to all three. Then, on top of that, some companies only report positive credit, and some companies only report, actually, all companies report positive and then negative. But some companies, like utilities, only put up negative. So, in other words, utility companies like the phone company or the cable company, they're not going to necessarily report positive credit, but if you are late, they're going to report negative credit. Where consumers should be concerned is this. You know that the mail is running really far behind, and some people don't do electronic payments. Either way, you have to know what dates your payments are due, and then back it up at least a week, and get your payments in early rather than late and chance it for being late. Because a key thing here is that if you make a late payment, it can be 1 to 200 points against your credit rating. So if you have a 700 credit rating and you're late on a payment, it could knock you down to 600. And why is that important? Because let's say they are going to go for a mortgage at some point. To recover from that can be really, really hard. There's no magic credit repair company. If you've actually paid late, it's not going to disappear. I don't care what anybody tells you. Highly unlikely. Exception being if you're one time late on a card that maybe you've had for 10 years, you might get an exception to that. But generally speaking, no. So that's where the consumer has to know, hey, I've got to not only pay on time, I should be paying everything off early. So what that means is you've got to live within your means. And a lot of people don't have any idea how to budget, and that's something that they should look at.
That's all great information. What's your suggestion for people who are looking to buy a home, who really aren't following their credit score, but would like to start building the best credit that they can?
Well, they need to look at a good source, first off, to monitor their credit and see what it's at before they go for the mortgage. I'm sure you get a lot of people where you pull the credit and they're like, oh, surprise, my scores are much lower than I thought.
Right.
So there's a service like Credit Karma or Credit Sesame, and those are fine, but they're not necessarily the FICO scores that you as a mortgage company are using, that the lender's using. So if you go to My FICO, which is owned by the FICO company, you're going to get a closer look at the actual numbers, as well as seeing what's on your credit report and making sure it's actually all yours.
Yeah, when we're doing credit checks as a mortgage broker, let's say, or as a mortgage loan officer, you're expecting to see what the customer tells you their credit is. Now, we usually ask, is it great? Is it good? Is it fair? Is it poor? And usually we'll get one variant off from what it really is. And so having the consumer or the borrower really on top of that is incredibly important. But as you say, how do we get consumers to understand that living beyond their means is hurting their chances to get a mortgage?
Well, that's the thing. It's a reality check, and I'm sure, just like you would tell a client, the same as I would, is you want to buy a house, but what are you actively doing in your life in order to budget for that? And there are plenty of budgeting programs that will help people do that, and it comes down to want versus need. If you're an impulse buyer, you may have a problem. You've got to rein it in and say, okay, you sit down and make the budget. You can just do it manually and say, okay, here's what my income is every month. what are my expenses every month? And then, you see what's left over, if anything. And so people aren't necessarily doing that, and they should. And I've seen people buy more house than they really could afford, because in some cases, some lender will say, hey, you qualify. I'll give you an example. I had a friend that said, hey, I qualified for a $200,000 condo. And I knew she didn't make a lot of money. And when she sat down and budgeted out what her expenses were versus, what she was being told she could afford, well, they didn't match up. She could only afford a $100,000 condo. So, you don't want people to get into a place and then default on the loan. You have to live within your means. And I'll give you another example, because my dad used to make me do this. When I went to buy my first house many years ago, he said, hey, write down everything for a couple of months. Every penny you spend, categorize it, and you'll see where you're spending money. Are you spending a lot of your money on restaurants going out? Are you spending a lot of your money on clothes, which is what I was doing at the time? And if you see where your money is going out the door and what can you cut back on. Because if you want to own a home, that's a reality check.
Right.
And the other thing is you should have some type of emergency backup fund so that you don't get in trouble if something happens, like if you lose your job, for example.
Lori, thanks very much for coming on. I want to have you back on because there's many questions about what does a consumer do if there's a problem, or where do they go to look for answers, but we're run out of time. And again, thank you very much for coming on the show.
Great. Thanks for having me. Appreciate it.
Thank you very much. That's Lori Zook. She is a retired credit expert. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening to us on The Mortgage Voice. We're happy to bring you the information each and every week. We love the show. We love our continued success, and we appreciate, and really, it's you, the people who listen to the show, who send in information and respond to what we're trying to do. And obviously, I get plenty of calls, letters, emails as to the content. If you do like the show and you want to continue to hear what we're talking about, click on something that we're doing that you like and you really want to hear more of it, whether it's on Facebook, whether it's on LinkedIn. Certainly it's the 5 stations in the 3 different states we're on, as well as the 8 major podcasts called the Big 8. YouTube, Jeff Barton, the Mortgage Voice. We're all over the place, and we're, again, here to try to assist you to get into the home that you've always wanted to, or refi in order to take some money out that you need. Joining us today again from Southern California, and it's been a Southern California kind of show today, sorry, for everybody who's in Nevada or Albuquerque. However, Phil Burson works for Compass Realty. He's been on the show before, and we've asked him back again to talk about the prospects for 2021. Phil, how are you?
Doing just fine, Jeff. Happy New Year. Thank you for inviting me to your show today.
Thanks, Phil, for coming on. Appreciate it. Okay, give us a quick synopsis of the market in Southern California, specifically, I guess, over in the Calabasas area of Los Angeles. What's happening in your market? Where are we headed?
Los Angeles County has been very, very busy. The year in 2020, the second half of the year, finished very strong. We saw appreciation from anywhere between 5 and 10%. And that is showing no signs of slowing down. We hope that with the vaccinations coming on board and more people taking vaccinations and sellers becoming more comfortable, we'll actually see a little bit more inventory to help us out with all the pent-up demand from the buyers.
There's tons of pent-up demand. How is the end of the pandemic? How far away is that, do you think, in terms of changing the way you're showing houses right now? And how are you showing houses right now?
We're showing houses with safety first. Safety first is always our concern. Way back in March or April of 2020, through the California Association of Realtors, we set certain plans in place to keep everyone safe. We have advisory forms that all people that visit the homes sign. We use masks, we use gloves, antibacterial. No more than 2 people in the home at any given time, along with the agent, and we show everything virtually first, Jeff. We have professional photographers
Do you find it's helped or hurt the business doing it like that?
You know, it's much more efficient, Jeff. Maybe it's not as interesting to the public because we don't get as many neighbors coming into property just to see what's going on. The buyers that are out there are very, very serious, as are the sellers. So it's a much more efficient way of doing business.
Yeah, you know what? I've heard that from other realtors, and certainly in the loan business, it seems to be that way. People in the market are ready to go. They're not just shopping, and I like that part of it.
Yes, absolutely. The same thing in working with yourself as a loan originator. Before we actually bring buyers to the homes, we ask for copies of the loan pre-approvals, again, to make sure that buyers are ready to go and they're serious. Because we've seen so many multiple offer situations right now, and we want to make sure, especially when we represent our buyers, that they're ready to go. They see something they like it, we can write an offer quickly, move to a quick acceptance, and get them a beautiful new home.
How many listing appointments are you doing on average? And have we gone back to the time whereby agents are cold calling in order to get listings, or is that really, given way to more social media campaigns in order to get business?
You know, we have probably 5 different legs going at any time in getting new business and new listings. A tried and true method is door knocking. However, that is frowned upon right now, again, because of COVID. I don't know how you would feel if someone showed up at your front door right now to try to list the business. So we are doing quite a bit of cold calling and a lot of referrals based on our private networks and past clients.
Yeah, the referral business has always been a way to do it. Obviously, being in the business for a long time now, you have that referral network. Okay, so given the fact that we're almost at the end of, I guess, COVID, let's say another 4 months, it'll be a tough bunch of months. When we get into the late spring buying season, how do you see it playing out?
I see it, again, being very busy. Last year, we lost our spring buying season, which is typically the busiest.
Yeah.
So, it was because of low interest rates, we were very busy throughout the year. Now, I think we'll see a little bit more increase in inventory. Like I said earlier, there's plenty of pent-up demand. But as far as the division in the seasons right now, typically spring is busy because kids were out of school, families were moving during those times. Right now, there's so much at-home education going on that it really doesn't matter where people are. So I don't know just how much of the spring market it's going to be in comparison to just the busy selling season as long as interest rates stay down as low as they are, Jeff.
Do you see that people are wanting more space because they're going to work at home? I mean, there seems to be a lot of articles about that, but I really haven't talked to a lot of real estate agents that say, oh, no, they won't buy that house because it's too small.
It's definitely a time of right sizing because people do not have to travel into the city. They can work from home. They need space to have a classroom at home, let's say. Maybe they need for their children, a swimming pool, office space. So it's more because people are spending so much time in their homes right now. The home has to be a work for them instead of before when they were there 8 to 10 hours. There was a place to rest their head at night, and they went up and went to work. So definitely people are right-sizing and buying homes that fit their particular lifestyle right now.
Do you see more people able to afford homes or less people able to afford homes? My mind is there's a lot of people out there who are still working, who can't afford a more expensive home. And with interest rates the way they are, it's obviously going to buy them more because interest rates are so low, the monthly payment is low. But what are you seeing?
Absolutely. Yeah, so the same thing, Jeff. Unfortunately, it's a very split economy. Unfortunately, people that have been affected negatively by COVID, either health-wise or employment-wise, that's a whole different conversation to have. But because of the low interest rates and people not traveling, they've saved a lot of money, so they're able now to afford a higher cost home, more expensive home with lower interest rates. as time goes on, maybe another year from now, as interest rates creep up a little bit, the price of the homes will have to come down perhaps a little bit to keep that monthly payment and the affordability the same. But we're seeing record prices right now, not only in Southern California, but in all states. The buyers they're buying because they know they're locking in incredible interest rates for the next 30 years.
You know, I heard that, not heard, but I read that savings rates have really gone through the roof. Most people are working, but saving a lot more money, either that they're not going out and not spending their money on movies and dinner and other such things. Do you think that that's also going to help the market a little bit when we get back on our feet after COVID, because people will have larger down payments to be able to make?
That's a very logical statement, Jeff. Yes, they'll have larger down payments to make. They'll be safer in
Right.
security within their family. In fact, one statistic right now is that I believe it's over 60% of homeowners have 50% or more equity in their home.
That's
so,
right.
Again, that's why it's very safe right now. It's not going to be a repeat of maybe what happened in 2008. People
Right.
have equity. There's security. They're making smart decisions right now.
Phil, shout out your phone number. Great agent here in Southern California, Phil Burson. And how do they get in touch with you?
Area code 818-425-7757. Again, 818-425-7757. And through our network at Compass and our colleagues throughout the country, if you're looking in any state, feel free to reach out. We can make referrals and help people out across America.
Phil, thanks very much for coming on. Informative, and again, really appreciate it. Thanks very much.
It was a pleasure. Anytime, Jeff. Thank you.
Okay, excellent. I'm Jeff Barton, your voice in the mortgage industry. That was Phil Burson from Compass, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening in. Thanks very much for tuning in. We are on a number of different stations, 5 stations, 3 different states. Trying to add some states, trying to add some locales where we are licensed as Malibu Funding. Malibu Funding is the show that sponsors. Their NMLS number is 79620. I always put that in, or it's on our website. If you go to themortgagevoice.com, you can see the website. Go to YouTube too if you want to see the channel. Is Jeff Barton, the Mortgage Voice. You can see this as well as our LinkedIn and Facebook shows that we put up each and every day. We're on the Big 8 podcast. There's a number of places. Look, if you go to any of these things, join, say that you like it. We like you. We love to hear from you. We love to hear the comments that's through the bartonblog.com. All of these things add to the juice of the show because your input is important and what you have to say is important. Sometimes I don't have the answers, and if I don't have the answers, I'll try to find them for you or direct you to a place where you might be able to find them. The show is about informing you, the consumer, somebody out there trying to buy a house today who knows nothing about the process. Yeah, that's what we're trying to do. It's to help you understand that this is something you can control, you can do, and you can get out there and purchase a home, or you can refi if you need to. A lot of people need the cash to refi. Either it's for a rainy day fund or they want to invest. And by the way, towards the last half of this year, there's going to be a tremendous opportunity for businesses to get out there. Now, I have scheduled for today's show, he'll be on next week, a guy who is his job is to help entrepreneurs in any market. And I assume that this market is going to be unique in that there will be, yes, a lot of people who have been hurt and will be out of business. There's some say half the restaurants in the US are going to close. But that only means that when the time is correct and right and ready to go, there will be opportunity for people in that industry. So how do we generate the excitement, even for people who've lost their businesses, to get back in the game, to get out there? Certainly the consumer is going to want to eat out and shop locally and, you know, whatever it is in that, whether it's movies or concerts or ball games. There's a lot of people who want to get back in the ball game. So we'll talk to him next week when we talk about that. Okay, the millennial and the Gen Z buyer have less purchasing power than past generations. That's not a good thing. However, that group is the largest purchasing group ever. They want to buy a house. So how do we deal with housing affordability? We talk about this almost weekly. What happened to the housing market in the US? We can't get somebody at a certain salary range into a house. We force them into renting. Now, I agree. Housing is not for everybody. A house is not for everybody, but it should be a choice for the consumer. There should be a house available for someone making under $100,000 in most markets. Should be. And I'm talking combined income here, if it's a combined income household. Shouldn't $100,000, I'm in sales, been in sales my whole life. It used to be the bellwether, the demarcation. If you made 100 grand in sales, you were doing great. Well, now you might not even be able to buy a house if your combined income is not $100,000, and that's not right. So some of the solutions that we've suggested on this show, and by the way, I've had pushback on it. People say, no, you shouldn't be changing the rules and regulations for lower income people in certain markets, in all markets, because that will only lower the value of properties. Okay, I put the stupid air quotes. Why? Because that is an argument that's been used by people to prevent lower income people moving into the neighborhood since they invented homes. Gee, you know, if you have a home that you want to build it, or you have a home that you want to buy and purchase and put down on a piece of land that you bought, why can't you do that? Well, maybe you didn't know this, and maybe you should know this. Most municipalities, counties, and towns and cities won't let you build a house less than 1,000 square feet. Now, sure, you got 4 kids at home and you think 1,000 square feet, how could you live in that? Well, one person could easily. I've seen these designs in houses. 400 square foot is a 1-bedroom with a kitchen. I mean, if you're looking at housing, as my son lives in a studio apartment and it's no more than 300 square feet, and he lives in Portland. Now, you can live in that square footage. It's not ideal, but you can do it. So why can't you build a house for that? Because most municipalities won't let it. Why won't they let it? Because it detracts from the value of the property surrounding. Now, I've never understood that, but that can easily be handled with deed restrictions and the ability or inability of a homeowner to do certain things with that property. Most cities and towns have plenty of land in what they call non-conforming shape, meaning that it doesn't match what it needs for setbacks, or it isn't big enough to be able to do anything with it. And we've seen, you drive down any freeway in the United States, most state roads in the United States, they have sections of where roads come together, or where it needs expansion, possibly in the future, where there is extra land sitting there. Now, there may be only, 1,000 square foot of it, but you could put a house on that if it was the right size. And if it was the right cost, you could house somebody for that. Anyway, this is what I've been suggesting, and whether you believe in it or whether you think it's a good idea or not, I do. And I think it's a way by which we can solve a lot of the homelessness and solve a lot of the housing problems by making housing more affordable in America. And that requires us to legislate and regulate in a much different environment. And those that push against it, why is there always people that push against common sense ideas? Because there is a need to be able to protect what you have. And I understand that. I don't know how to compensate people for that, but certainly there is ways by which we can negotiate that in order to get people who are sleeping on the sidewalk into a house. Yes, but also people who are making, I don't know, what is it, $7 an hour in some states as minimum wage at working at any of these minimum wage jobs. Now, how's that person ever going to get ahead? How are they going to pass on to their children generational or I don't even know what I called it, father to daughter wealth through their home purchase if they're not allowed to be able to get into a home now? These are the things that can be done. They should be done. Anyway, I'm Jeff Barton, your voice in the mortgage industry. That's my lecture for today, and we'll see you next time. Thanks very much for listening.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.